What's up, everybody? I'm your host, Khaos Dubs, and I think I'm going to start releasing a couple of crypto news things every week. So here we go with the first episode. First thing up on the chopping block, a $100 million crypto scam. The SEC sues Kucoin for alleged fraud. The Securities and Exchange Commission continues its enforcement actions against the crypto industry, filing an emergency action against Miami-based crypto hedge fund Kucoin. According to the SEC's complaint, the hedge fund, launched in 2018, raised $100 million from more than 55 investors to invest in crypto assets, which its principal Kevin Kang used to make Ponzi-like payments and for personal use. Kevin Kang violated the anti-fraud provisions of the federal securities law, and Kang guaranteed investors that money would be used to trade crypto assets and produce further profits. The SEC alleges that Kang misappropriated more than $371,000 of investor funds to pay for vacations, sporting events, tickets, and a New York City apartment. Well, that's nice and shady. Let's move on to the next one. BIS successfully completes retail CBDC pilot called Project Icebreaker. Project Icebreaker's goal was to determine the efficacy of using CBDCs for cross-border payments between different currencies. Sounds a little bit like what XRP was designed for. Project Icebreaker shows how different CBDC solutions in different countries could enable instant cross-currency transactions in a way that would greatly benefit the end users. Additionally, the project also implemented the use of bridge currencies, which come into effect if transactions between two end currencies are unavailable or not favorable. Enter XRP. The regulators did not share further details of the bridge currencies and how they function. It is unclear whether these will be developed in-house by central banks or whether the system will allow the use of private bridge currencies. Now, there's been a bunch of talk about if banks try to develop their own bridge currencies, it's going to be a nightmare simply because things like XRP has already been around for so long. They have a developed and working product, and they also have a developed community. So I feel like this is not going to work well for the government if they try to do that. They're going to end up falling back on XRP anyway, I think. But in news again, in more news here, we got Ethereum at risk. What happens if the SEC rules it as an unregistered security? Well, the SEC has not yet made a ruling on Ethereum's classification, the potential consequences for Ethereum and the broader crypto market are significant. It would be subject to additional regulatory requirements, registration, and reporting requirements. Although if Ethereum is classed as a commodity instead, it could have more freedom and more flexibility in terms of development and use. Securities represent an ownership interest in a company such as stocks, bonds, and mutual funds, whereas commodities are physical goods or raw materials that are traded on exchanges. Think gold, oil, and corn. Several attributes of Ethereum that have led some to believe that it should be classified as an unregistered security are an initial coin offering, being one of the main arguments. Investors were able to purchase Ethereum tokens with the expectation of receiving a return on their investment. And if it is classified as a security, investors may become more cautious about investing in cryptocurrency market as a whole. Additionally, the value of Ethereum and associated altcoins could decrease, leading to significant losses. The SEC's ruling on Ethereum may influence the regulation of other cryptocurrencies in the future and the wider crypto space. Now, it looks like Kraken is actually launching its own bank very soon here. So, Kraken originally won its bank charter approval in 2020. And the crypto industry is suffering from regulatory crackdown, but that's really not preventing Kraken from seeking to launch its own bank. Kraken Bank was the first digital asset company in U.S. history to receive a bank charter recognized under federal law and state law, and will be the first regulated U.S. bank to provide comprehensive deposit taking, custody, and fiduciary services for digital assets. Kraken recently reached a $30 million settlement with the Securities and Exchange Commission over its staking program, which it was ordered to shut down in the US. And I'm sure y'all heard about that, but it's interesting that they're really poking the bear, so to speak, to really push into a new frontier here. Now, this is a big piece of news here. Egypt arrested dozens over alleged crypto scam. Egyptian authorities have arrested 29 people, including 13 foreign citizens, accused of running an online cryptocurrency scam that defrauded thousands of investors. And the network pocketed about $620,000 at the expense of its victims within the country. The online platform Hogpool promised clients financial gains after having lured them by fraudulent means. And the scheme promised large profits from cryptocurrency mining and trading services for fees charged at an attractive foreign exchange rate. In fact, it is illegal to dabble in cryptocurrency in Egypt, and it may be punishable by prison and a fine up to $325,000. Hopefully anyone that got caught got some sweet gains before getting caught. Hogpool abruptly ceased operations in February and vanished with the money. Classic rug pull. The network was planning to launch a new platform called Riot when they were finally arrested. Officials also seized 95 mobile phones, 3,367 SIM cards, and 41 foreign bank cards. Egypt is suffering one of its worst economic crises ever currently. And it looks like Australian crypto regulations are likely to be delayed until mid-2024, which is an awesome piece of news for anyone living in Australia. Australia is one of those countries like Canada where it's like a nanny state where everything's kind of a little bit overreaching. But I find that a little strange that they're kind of not rushing into that. Now, let me explain this a little bit. So although the government hasn't given a timeline for bringing in crypto legislation, last month it said it would release a consultation paper about the issue in the middle of this year. The Treasury revealed how some stakeholders might be disappointed with a perceived delay in implementing a licensing regime, but viewed the concerns as somewhat mitigated by the collapse of several crypto companies and market crash earlier in the year. So they're kind of like, meh, the market crashed. Nobody cares about it right now. We're just going to, let it ride, basically. It'll come when it comes. Interesting perspective to take. Now, Ethereum is actually going to be being released from its first round of staking either later this month or the beginning of next month. So here are some of the sell-off expectations ahead of the Shanghai upgrade. Concerns have been raised that unlocking staked ETH will cause a flood of tokens on the market, resulting in intense selling pressure. The Ethereum Shanghai upgrade is one of the most anticipated upgrades in the community, as validators will be able to unlock their staked ETH tokens for the first time since the launch of the staking contract. According to data from CryptoQuant, 60% of ETH staked is in the red. That equates to 10.3 million Ethereum tokens with unrealized losses. When token holders are sitting on unrealized profits, the selling pressure on that asset typically decreases rather than increases. When many assets are unstaked simultaneously, it is common for some investors to want to cash out their profits, creating selling pressure. High selling pressure is not expected because Ethereum investors have very little profit potential. Because there is little selling pressure, the price of Ethereum is unlikely to fall. Early in January, Ethereum developers reached a consensus that the Shanghai upgrade would take place in March 2023. Unlocked ETH staked by validators is the only major code change in the Shanghai upgrade. The analysts assert that the investors' concerns that the improvement will cause prices to plummet by flooding the market with ETH are unfounded. According to them, the volume of ETH outflows will be less significant than many analysts predict. The Shanghai tech upgrade is scheduled for April, so I guess we'll have to wait and see. But due to Ethereum centralization, personally I sold a little bit of Ethereum I had a little bit back, so not interested anymore. Now we got Binance in hot water as documents and texts on alleged plans to evade regulations come to light. The world of cryptocurrency has been shaken once again by the latest report from the Wall Street Journal. According to their sources, Binance, the biggest player in the industry, has been developing a strategy to evade the risk of facing prosecution by U.S. authorities. The article also claims that Binance, founded in 2017, and Binance US, a subsidiary of the former, are more linked to than the firms have let on. The two share employees, share funds, and an affiliated entity that traded cryptocurrencies. Moreover, the US-based digital wallet source code was maintained by Binance developers in China. As a result, Binance, as a global company, had access to information about its customers in the United States. Concerned that the exchange violated US AML laws and sanctions, the DOJ opened a criminal investigation against Binance and CZ in 2018. The DOJ has not yet determined whether to file charges against the business or specific executives. So maybe we'll see something coming in the future, maybe not. But I guess we'll just have to hold tight. Now, Snoop Dogg's in the news again, or the Web3 news, I should say. He's been revealed as a co-founder of a Web3-powered live stream platform, and it's called Schiller. American rapper and actor Snoop Dogg has been revealed as one of the co-founders of a Web3 platform, live streaming platform known as Schiller, adding yet another Web3 partnership for the well-known artist. The app is described as a live broadcast platform that aims to combine Web3 technology with real-time live streaming content. As for Schiller, blockchain will feature heavily in the platform, allowing content creators to token gate their streams and promote non-fungible tokens or other products from e-commerce websites. Now, it sounds like Algorand's My Algo wallet has issued an urgent alert to users, and here's the reason. About 8 days ago, there was a problem with the Algo wallet, but it seems like there's been another release of an alert here. In the earlier hours of today, the Twitter account of blockchain security firm PeckShield Alert sounded an alert to the crypto community that one of the corporate wallets of the decentralized limit order exchange on Algorand, AlgoDex, had been infiltrated by a malicious actor. In light of this, Algorand wallet provider MyAlgo issued a dire warning to its users to withdraw their funds or rekey their funds to new accounts as soon as possible, telling them not to wait. So if you have anything on AlgoDex or on MyAlgo wallet, you better do that if you haven't already, because your funds are at risk. Now, I've got a little bit of news about Amazon. They're going to be launching an NFT marketplace in the next month. So what can we expect? Well, Amazon is set to launch its own NFT marketplace in the next month with the option of having digital collectibles linked to physical goods delivered to customers' doorsteps. The details so far state that the marketplace will have 15 NFT collections available on launch for US-based customers before expanding worldwide. NFT aficionados will be able to purchase the digital collectibles with their own Amazon account via debit or credit cards. This will allow those who do not have access to a crypto wallet, such as MetaMask, the ability to buy NFTs without having to purchase cryptos. Now, who doesn't have access to a crypto wallet? I don't know. That doesn't make sense. Maybe if you don't have internet or like off the grid, but pretty much everybody has access to free crypto wallets and self-custody. The Amazon NFT Marketplace could be called either Amazon NFT Marketplace or Amazon Digital Marketplace. Both really creative. They couldn't have come up with something a little more exciting. Amazon shoppers will be able to purchase fashion-oriented NFTs that are linked to physical clothing such as jeans, trainers, and sweatshirts. These NFTs will be delivered to customer NFT accounts while the physical piece of clothing is being delivered to the customer doorsteps. To me, I see no benefit to that other than to try to hop on the NFT train. I mean, maybe these people can sell their NFTs later on, but I think this is just Amazon trying to make an extra buck. 80% of Cardano investors are in the red. 80% of investors feel the sting of losses, with blockchain data showing they're out of money or sitting on unrealized losses. According to data from blockchain analytics firm Into the Block, while 80% of Cardano investors are in the red, 4% are in the money or breaking even, while 16% are in the money or sitting on unrealized gains. This is a worrying trend for Cardano, which has been hailed by some as a potential Ethereum killer. It is clear there are three large groups of unprofitable Cardano token buyers. The first group, with a total of 669,000 addresses, purchased ADA at prices between $171 and $297, RIP. The second group, of over 560,000 addresses, purchased ADA below $171 but starting at $129. Finally, the third group is most likely recent buyers who purchased tokens between 40 cents and 50 cents. Collectively, these groups hold a staggering over 8 billion ADA, which is currently worth over $2 billion. Cardano supporters point out the project has a strong development team and a solid roadmap for the future, which could make it a strong contender in the cryptocurrency space over the long term. That pretty much wraps up today's crypto news, but if you like this video, make sure you like and subscribe. If you want me to come out with more, tell me in the comments and we'll be doing a whole bunch of these. Check out the shorts we've got, check out In the Khaos first, and we'll catch you in the next episode. Peace out, everybody. Thanks for watching.